Everyone, welcome back. Today we're looking at Volvo and Polestar. Volvo cars are to dilute stake in the EV maker Polestar. Volvo said quite recently it plans to distribute 62.7% of its stake worth 9.5 billion crowns, that's $920 million, in the Polestar company to its own shareholders. But this is 62.7% of its stake in Polestar. The heavy involvement by Volvo Cars in Polestar, where it owns 48% of the shares, has been criticized by analysts who sees the stake as a drag on Volvo's resources. And this is exactly the point I was trying to make recently, that ultimately this decision might lead to more benefits to Volvo. Currently, it's taken resources from Volvo and putting that into Polestar. And Volvo needs to slowly undo this. Polestar should not be that dependent on Volvo long term, because Polestar needs to be its own independent company eventually. So it's all a matter of time, to be honest. Now, we do have a quote from the CEO of Volvo Cars, Jim Rowan, and I quote, "As we have significant operation collaboration with Polestar and a financial relationship, it is logical for us to remain influenced throughout a smaller 18% stake in Polestar," said the CEO. And this is exactly what I wanted Polestar to do. And this is exactly what I wanted Volvo to do. Give up some of your ownership in Polestar to your parent company, Geely, but not all of it. Keep some of your ownership and actually reap the benefit, because you've invested in this company so much, you still need to get your rewards. Like I always say, Volvo Cars do not want to make the same mistake Mercedes did when Mercedes sold their entire 10% of Tesla when it was just too cheap. It was around 100 million. If Mercedes held until Tesla was at its highest, that would have been worth anywhere from 80 to 100 billion dollars. Mercedes lost big time on Tesla. Volvo do not want to make the same mistake. So they're giving up some of their financial responsibility, handing that responsibility to its shareholders, the major shareholders, the parent company, which is Geely. I think this is a smart decision. As I've said many times, and I'll reiterate, Volvo will still be involved in Polestar in terms of manufacturing, R&D, sales, and aftermarket. So they will still have a heavy involvement. The company said it had a financial relationship with Polestar through an outstanding convertible loan of $1 billion. Chinese Geely, which is a major shareholder of Volvo Cars, will continue to provide operations and financial support to Polestar. Keyword, financial support, meaning they will become perhaps the major funder, meaning Geely will become a more important partner for Polestar going forward, because they'll be funding a lot more money into the company. It also provides operations as well, meaning those new factories that Polestar are building in China for the Polestar 5 manufacturing, I think those are majorly funded by Geely. And I think currently Polestar is using Geely's factories in China. So keep that in mind. There are some close relations. Now, the stake distribution would be made through a 2-to-1 share split, followed by an automatic share redemption process, Volvo Cars said. So this is where it gets very interesting. The stake distribution would be made through a 2-to-1 shares split. So they're splitting the shares. This just became even bigger news than you could ever expected. Essentially meaning Volvo Cars shares will fall in percentage. They're going to lower the shares outstanding. So to understand what this all means, a 2-to-1 share split grants you 2 shares for every 1 share of a company you own. So this is interesting. I had this the other way around. Now, what this actually looks like is that they're going to double the shares in circulation, which doesn't sound like a smart idea to me. Why isn't this a smart idea? If the shares percentage double right now, the shares outstanding, the company stock will be even more cheaper. It'll be half the price. That's not a good look for Polestar. I'll read it again. A 2-to-1 share split grants you 2 shares for every 1 that you own. If you have 100 shares of a company that has decided to split the stock, you'll end up with 200 shares after the split. A 2-for-1 split doubles the number of shares you own instantly. So let's try to understand it again. The stake distribution would be made through a 2-to-1 shares split, followed by an automatic share redemption process. All of us who are invested in Polestar, our shares will eventually double. The amount of shares we own will automatically double. It'll be the same value. But I'm pretty sure this means that the Polestar company, the share price will fall half the price, if I'm not mistaken, because they're doubling the shares in outstanding. I just hope I'm wrong. From a public standpoint, I don't think this is a good idea. This is not a good look for Polestar. From a business point of view, an internal business point of view, this might make a lot of sense for Volvo and for Geely and for Polestar. Financially, behind closed doors, it might make a lot of sense. But for the public, it doesn't make a lot of sense currently. So I look forward to understanding this more. What does this really mean? The key word to keep in mind is that these articles that are being published, they say Volvo to dilute its stake in EV. What happens when you dilute something? Well, you add more. That makes the quality less. The quantity is more, quality is less. That's what dilution means. So it really looks like they're going to dilute the Polestar share. Volvo to dilute stake in EV maker Polestar. I don't know what the real plan is, but it sounds a little bit wild. Now keep in mind, Geely owns 79.5% in Volvo cars. That's substantial. And given how cheap the stocks are right now, this is probably a great time for Geely to do a company buyback, a stock buyback. Keep in mind, Li Shifu holds a roughly 39% stake in Polestar. I think that's the founder and owner of Geely. Li Shifu Company is now a major player with stake in Mercedes-Benz, truck maker Volvo, and Aston Martin. Geely has also sought to establish new brands in Europe, such as premium EV maker Zeekr. Who knew that they were a major shareholder in Mercedes-Benz? I think I've heard that before, but I think Daimler is still the major shareholder in Mercedes-Benz, but it looks like Geely has a substantial share, which means that they're probably on the board of directors. So Geely will continue to back Polestar operationally with funding, while Volvo will support R&D, manufacturing, and after-sales, according to statements on Friday. Like I've said before, this makes a lot of sense. From a financial standpoint, this certainly makes a lot of sense. Volvo stock falls 5% after it set out to dilute stake in electric maker Polestar. But you know what I've also noticed? The Polestar shares have fallen heavy today as well. They really have. In case you're wondering what that looks like, in the last 7 days, Polestar has fallen by 25% exactly. It's now $1.32. Absolutely dead cheap. Now, I'm already down substantially on this Polestar investment, but to be honest, I don't really mind, because I do know that the company is undervalued heavily. $3 billion in market cap. It's never been this cheap. But I must say, I do feel bad for anyone out there who invested in this company at the IPO, because we all knew it was going to be a rough road, but I don't think many understood that how rough it would be. Turns out it will be pretty rough. So just before we close out this video, let's try to understand how much shares do Polestar have currently. Currently, they've got 2.1 billion shares outstanding. Now, if they double this, because they're talking about a dilution, a 2-to-1 stock split, if they actually do that, we're looking at 4.2 billion. The price will be half. I don't think that's a good thing. I don't think that's a good thing at all. And if anyone disagrees with me, I need to understand why. But listen, that's it for today. Thank you for watching, subscribe, and I'll see you in the next one. Peace.